Good afternoon, it's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about the services and free products, just visit CFDs.com. Okay, interesting day today, folks. Interesting day. The short squeeze obviously continues from yesterday, although towards the close we did have the sell pressure obviously starting to kick in. And we'll certainly discuss that as we go along. So certainly be sure to visit cfds.com. It's spelled CF Charlie Foxtrot Delta Sierra.com, and certainly observe their products and services. Very sturdy platform, and a platform that I would highly recommend. Okay, so with regards to fundamentals, let's start with regards to the actual market, and let's discuss exactly what's happened today and the outcome of price action. Okay, so the scenario that we came into today was we had the actual news flow with regards to the situation in Greece. Apparently there was some sort of deal that had been brokered from Germany's perspective. Apparently, again, more rumors and counter claims, basically. So the so-called deal or potential debt deal had been obviously was being spun out of the rumor mill. Okay, and the markets are obviously short squeezed with that surety and the backing of Miss Merkel, etc., etc., only for it to be later rejected. And obviously we've seen the outcome so far, with the IMF obviously walking out towards the afternoon, which isn't obviously the optimal scenario here. Okay, so the Asian markets overnight, the Nikkei certainly recovering back lost ground, given the fact that the BOJ remarks, which I discussed yesterday, and also with regards to subscribers, I did explain in the live analysis service that the statements had been retracted in order to avoid a yen, yen pairs obviously from collapsing. So the yen had strengthened, and which obviously caused a risk-off scenario the day before, with the BOJ retracting the statement, saying that that wasn't the intended side effects, etc., etc. The markets obviously reversed, and the Nikkei obviously ended up higher. We had the Shanghai and the actual Hang Seng higher overnight as well. The economic data out of China more or less came out in line, and obviously the day prior to that the inflation numbers were not as strong as expected, so again the stimulus trade kicks in. Okay, so the markets obviously in the morning with regards to Europe, as you can see, everything more or less everything finished in the green until the very last few minutes when the market sold off, and the actual news from the IMF with regards to the IMF walking out and basically unable to communicate, unable to work with the actual Greek government. IMF says major differences between IMF and Greece in most key areas. No progress and differences. Technical discussions have stopped. IMF pause. Gloom on Greece negotiations. IMF team is on its way back to the US, citing lack of progress towards a deal. So obviously all this news flow is negative, and therefore the bias obviously remains negative going for the next 24 hours in terms of trading. Okay, so in terms of economic news flow, the news flow out of Europe, the unemployment rate was actually rose, so slight negative there. US retail sales did really well, came in strong. Continuous jobless claims slightly rose, but nothing of any real alarm or concern. It was all about the retail sales numbers beating expectations, and also import prices and export prices rising much higher than expected. So again, everything was hawkish to dollar positive, and therefore that will obviously increase the concerns with regards to a potential rate hike, which again is negative for the markets. Okay, so the markets will certainly interpret that as being negative, given the fact that it basically supports the thesis that interest rates need to rise, and emerging markets should certainly come under pressure, and that would obviously pressure the US markets too. Okay, so dollar positive from my interpretation, but given the fact that the concerns out of Greece, now any risk-off type news out of the Eurozone certainly sends the Euro USD higher, and that's one of the reasons why we're seeing strength in the actual Euro USD at present, because it's a reversal of the QE trade. So i.e. if you want to go, you're bullish the European situation, then you obviously short Euro long equities, and if that trade gets reversed, then Euro starts to fly higher, and obviously European equities go lower, and that's obviously the case given the fact that the news from the IMF. Okay, now in terms of technicals, now that I've discussed the fundamentals, and that certainly seems to be the backdrop, it's all about retail sales out the UK, US being stronger. No real economic data out the Eurozone today, other than the fact that we had the Greece news, and the situation remains fluid. Okay, so let's quickly discuss the bonds. The bond market, obviously the yields and the price of the bonds, obviously very important here. So again, we did have a thrust higher today, and given the fact that the Euro USD obviously reversed, so we had a strong day today in the bond market, and that obviously helped the European markets obviously rise. Given the actual bonds obviously are now potentially into resistance, that should obviously in theory, from our perspective or our situation at present, certainly put the actual Euro USD start to potentially force it higher. So certainly keep an eye out for the Euro USD here. Let's bring up the Euro USD now. Bonds being into resistance equals equity markets into resistance. So this diagonal trend line certainly is holding on the Euro USD, and certainly needs to be observed. We do have horizontal support as well in this region. Here we go. We have horizontal support here as well around the 1.1204, 1.121 level. We have resistance obviously holding in the upper level. So again, that needs to be observed for now. Okay, so again, if we have a thrust higher here on the Euro USD, it's obviously negative in terms of the markets. Okay, understand. Okay, so let's start to look at the actual indices now. Let's start with the German DAX. That will be the key driver in Europe. Okay, start with the daily chart, always the largest time frame. Okay, so daily chart, obviously we bounced off this lower channel support, which I have highlighted now for quite a few seconds. We went as high as the almost reached the 61% resistance, past the 50% resistance fib, and the market's obviously putting a potential topping tail, so that's slightly negative now going forward. Obviously we've had a bearish engulfing candle at resistance, and that certainly needs to be respected. We currently have a bear flag scenario, so one must observe that. So bearish consolidation here after this bear flag, and then obviously the next move potentially will be lower, given the fact that the news regarding the IMF walking out in Greece, that doesn't exactly put them in a positive light. Okay, again, resistance zones here at the 11,450 level. We have resistance above at 11,520. Given the fact that we've thrusted almost 600 points from the pivot low at obviously 860, and then we went as high as 450, that's quite a stellar move. 10 minutes chart. Okay, 10-minute chart, as you can see, held at resistance level to the pip, pretty impressive at 11,450 before it started to it decided to reverse. We obviously closed a gap here at 11,340, but yet the DAX was certainly on some sort of a steroid this morning, given the fact that the markets had been pricing in a deal and so on and so forth, and the Greece uncertainty being taken away from the marketplace. We've obviously broken this key trend line, so that trend line remains the key. We've broken out this contracting type wedge pattern here. Okay, so again, bearish from that perspective. This is just a bear flag situation here, and then obviously you are looking for a potential move down to the 200 MA, which is around the 11,135 level. We do have the gap open level, which today was the market opened here at 11,240, closed at the 11,265 level, so we basically more or less gone back to neutrality. So your neutrality level is around the 11,250 region. If the markets do obviously start to sell off in the US markets, then expect this move down to the 11,150 region to come into play. Okay, look at the French CAC now. This is the second important indices in the European equity market. So the daily chart of the French CAC, again into gap fill resistance, and the market obviously held that gap, certainly has respected it, so therefore bearish going forward. We obviously held a 200 MA as well. Obviously it's a bearish engulfing candle. The market did overshoot the gap level, which was quite surprising. Again, we had this rising channel, channel which obviously we've broken out of now. This is a bearish engulfing candle looking for a potential H&S reversal. So 10-minute chart of the French CAC, as you can see here, if I just draw this in, pretty straightforward and very clear. in terms of the potential pattern here. So we will be targeting on the downside. So we are looking for a HNS pattern here. There's your left shoulder, obviously your head's gone in now, looking for consolidation, right shoulder, and then looking for a potential move and thrust low. Again, neutrality point is 4920, 4930, and obviously brings into play the 200 MA too. So again, that needs to be respected too. Okay, the actual scenario situation is at hand and certainly remains negative again for the foreseeable future, especially given the actual technical setup as well. Daily chart of the Euro stocks. Okay, let's bring this into the equation. Again, we still remain bearish given the fact that the overall trend is lower lows and lower highs, so therefore innocent, obviously guilty until proven innocent from my perspective. Okay, so again, this is guilty bearish. Okay, so therefore 61% retracement has held, the upper channel has held, and we are looking for a potential reversal lower given the fact that the Greek saga still is ongoing. The 60-minute chart of the actual Euro stocks, again we held the 200 MA, we held the horizontal resistance at the 3590 region. Quite a substantial and impressive sell-off there. Okay. Now obviously we do have a we obviously need to be open to a potential inverted head and shoulders pattern as well. So again, I'll look at that once we put the right shoulder in. But for now, the bearish engulfing candle obviously dictates, and that will be the main market driver or market mover. You are looking for a potential bear flag scenario here, and looking for quite a substantial sell-off as well. Okay, with regards to the actual Euro stocks itself. Okay, folks. So again, very bullish channel broken, and the market certainly remains vulnerable and very negative at this juncture from my perspective. We are looking for a thrust lower, potentially down to the 3500 level, or even test the lower support level at 3420 as well. So there, so all the potential scenarios. Now again, looking at the FTSE 100. Okay, bring up the chart of the FTSE 100, and you can see that we held a 38% fib. We held previous support equals resistance. Bias certainly remains bearish given the fact that we bounced off the 200 MA. Okay, the weekly chart of the FTSE itself again still remains bearish because we're consolidating in the lower channel and it's a failed bull flag. So therefore the scenario certainly remains bearish. Looking at the smaller time frame, 60-minute chart of the FTSE 100 itself, as you can see, we've obviously held a 75% fib. Previous support equals resistance here. Bearish engulfing candle. Market obviously consolidating within. Now at this very juncture, my bias would certainly be negative, looking for this potential bear flag scenario to play out, given the fact that the actual commodities certainly have come into resistance, and copper obviously was down quite substantially. Okay, so that's something that we're going to be focusing on from regards to the FTSE. Potential double bottom here at 6740 potentially, or alternatively using your fib ratios, you can take the pivot low to the high, look for a potential support of 50 to 61% before it starts to potentially move higher. But again, both scenarios, you do have the potential for inverted head and shoulders. So again, this is your left shoulder, this is your head, your right shoulder obviously is going in. But again, I think that's a hypothetical scenario. Let's just deal with the status quo. Let's see how the market reacts to the actual Greek news. Again, that trend line here certainly needs to be respected, given the fact that we may well retest that again around the 6,800 levels. So don't be surprised if that level certainly comes back into the equation. But again, inverted head and shoulders potential. Again, we need to remain open to all possibilities as a trader, and that's basically what I'll be doing. Okay, I think that's a wrap in terms of the market itself. I can discuss the US markets, but I think I'll do that at a later stage. I'll make another video for you all to give you an insight with regards to that. Okay, and bear in mind, certainly visit cfds.com and certainly apply and open an account there. Very highly recommended. Okay, folks, and obviously I am acting as an analyst on their behalf. So take care, good afternoon, goodbye now.